shares his deep knowledge on Bitcoin's value proposition, the importance of sand money, and why this digital asset is becoming essential in today's economic landscape. I'll be walking you through key highlights from this interview, providing my own perspective on how these points can impact your investment strategy. So without further ado, let's jump into it. Peter makes a compelling case for why Bitcoin is considered pristine collateral, especially when compared to real estate. Real estate has long been a reliable investment, but it's burdened by factors such as property rights, government regulation, and tax policies. Peter also breaks down how government influence plays a massive role in real estate investment through tax incentives and zoning laws. Governments can manipulate property markets, offering tax breaks or subsidies to certain areas, creating artificially inflated values. Bitcoin, on the other hand, is borderless and doesn't face these same constraints. It's a property right without borders, unlike real estate, which is tied to local laws and infrastructure. Its accessibility to anyone with an internet connection is revolutionary. Now, in my view, this distinction is key. While governments can make or break the value of real estate, Bitcoin operates in its own independent ecosystem. I think it's crucial for anyone thinking about their financial future to realize that Bitcoin offers freedom from these external factors, giving you control over your own wealth, and is therefore one of the most resilient and forward-thinking investments you can make today, especially when you're looking to move away from traditional government-influenced markets like real estate. In this segment, Peter emphasizes how the world's growing population and increasing digital adoption are set to drive Bitcoin's value. As 8 billion people come to realize the importance of owning a portion of the 21 million Bitcoin, demand will skyrocket. This demographic shift is an enormous opportunity for those who adopt Bitcoin early. Peter draws a fascinating comparison between Bitcoin and limited land and real estate. With only 21 million Bitcoin and 8 billion people on the planet, the scarcity is real. Bitcoin's finite supply makes it the ultimate digital land. In real estate, you can always build, hire, or expand into new areas, but with Bitcoin, no more can ever be created. From my perspective, this is a wake-up call. The population growth combined with technological advancements means that more people will demand Bitcoin in the future, just as people have historically fought for land. It is because it's one of the most powerful aspects of Bitcoin. Its scarcity drives its long-term value. As more people adopt Bitcoin, its price will inevitably rise. Here, Peter discusses why now is the ideal time to invest in Bitcoin, especially on a risk-adjusted basis. He mentions that many of the early risks associated with Bitcoin, such as regulatory uncertainty, have been mitigated. With growing institutional acceptance and bigger capital inflows, the scarcity of Bitcoin will only increase, pushing its value even higher. This is a golden window of opportunity. I agree with Peter that the downside risk has never been lower, while the potential upside is enormous. If you're not considering Bitcoin now, you might be missing out on one of the best investment opportunities of our lifetime. Peter identifies the biggest hurdle for Bitcoin adoption: misunderstanding. People are often scared off by its volatility, but they fail to see that this volatility is a necessary part of its rapid growth. Future generations, millennials and Gen Zs, are most likely to understand this and adopt Bitcoin as a preferred asset over traditional investments like real estate. Now, I think this point is key to understanding Bitcoin's future. Once people get past the fear of short-term volatility and look at the bigger picture, the potential for long-term growth becomes obvious. Bitcoin is here to stay, and younger generations are going to be the ones driving its adoption. Peter touches on an important point about millennials and Gen Zs preferring to rent rather than own property. Buying real estate is becoming prohibitively expensive for many, particularly in markets like Australia. Now, instead, younger generations are focusing on more flexible investments like Bitcoin, which offers higher returns without the heavy financial burden of home ownership. This shift in mindset among younger generations is something we should pay attention to. Bitcoin offers them the flexibility and return potential that traditional property investments don't provide. Peter highlights the importance of estate planning for Bitcoin holders. With estate taxes potentially taking up to 40% of your assets, planning ahead can save a significant amount of wealth for your heirs. Careful planning can increase the amount of Bitcoin passed down to the next generation by up to 66%. This is crucial for anyone invested in Bitcoin. Estate planning isn't something people often think about, but if you want to maximize the legacy you leave, it's a vital consideration. I completely agree with Peter here. This is something every Bitcoin holder should be looking into. As Peter Dunworth has shown us, Bitcoin's role as a pristine collateral asset, its unique scarcity, and its potential as a long-term investment make it one of the most promising opportunities in today's financial landscape. It's not just an asset class for techie-savvy investors. It's a tool for financial freedom that can protect and grow wealth across generations. If you're serious about understanding the future of money, now is the time to get involved. Thanks for tuning in today, and be sure to subscribe to my channel for more insights on Bitcoin and sound money investments. Until next time, stay informed and stay ahead of the curve.